AutoZone reported a fairly decent earnings. This is the gap open up list on the NYSE. LinkedIn, well, hey, it's a fairly new issue. If it's shortable, you would want to short up into the top end of that. This is the gap up. Some of these are earnings related, but the gap open up on the NYSE where 60% of electronic program trading occurs within the bigger money management environment is that we're not seeing a huge gap up, but on the flip side, on the gap down, you got Darden reported earnings this morning. You got NS. Some of these are earnings. You got CMG. Boy, you talk about an overbought stock. We'll be going through this overbought stocks for the liquidation in 2012 as part of our 2012 analysis. Info at stockmarketfunding.com. This is your gap down list on the NYSE. As far as any halted stocks go, let's see what may be in there. Nothing that we would be interested in or looking at. So the gap open down list on the NYSE, you've only got 4 that meet the qualifier. CMG, watch that one there. As a matter of fact, let's take a look at it quickly. CMG, let's take a look at it quickly. It's back up here. It's a great stock. Hey, but guess what? It's overbought. So when I take a look at the CMG trade here, on here, I will show a weekly Chipotle Mexican Grill. And somehow, let me retype this in, CMG, is that I'm going to give the weekly analysis just to show people very quickly on a daily chart that CMG is going to come up and hit that Crown Vic right at that top reversal pattern that happened right over here. When did that happen? 11/8 of 2011. That's where your support level was. This is a leveraging process. This diagonal trend line that's here on the video is that's going to be your near-term support once you break below it. So we're going to look, not because Chipotle Mexican Grill is a bad company, we never said that, but what we are saying is that because of it being such a wonderful asset to own, is that there will have to be liquidation in this asset. And that even though within the rally of Europe and all the stuff and re-leveraging up the asset, you still remain in a daily sell signal on a daily chart. We're going to be looking at put contracts that go out below the market, and we will be looking at below the market. It's called out of the money. Is that this area right here on Chipotle Mexican Grill is where this is it, 280. That's where below the market put option will be bought because that is the cheapest level that it's in. Once it hits a certain level on standard technical analysis, is that we've re-leveraged the trend to the top end of the resistance. It's going to take a lot of money to get that above there. Watch that CMG. Now, let's get back to the pre-market, and you have a slight $1.21 gap down. You'll look for this to roll up. It's got to take out, and you'll know that you'll get it up there at the high. And it's a very light volume traded stock. The value of it is overbought. The potential risk for the holder is that people have to liquidate one of the better winners in the NYSE. That's the gap open up and gap open down. We are held hostage on lighter volume between now and Friday, with all of your central bankers around the world are all going to make a great decision along with Mr. Geithner. Tarp it up, world.